Hello friends, welcome to GSTZen webinar series on the annual returns. We are going to create a multiple webinar series for the annual returns. Most of our users have lot of queries on how to file the annual returns. So my name is Venugopal and I am going to walk you through all the different webinar series. This series is to all the chartered accountants, finance professionals who intend to file the annual returns and using GSTZen, how we can comply this procedure very peacefully. This is our objective. As I said, this is a webinar series and we have totally 19 sessions which are coming one over one. In this session, I am going to discuss with you on the legal background of annual returns. So moving on to legal background, why this annual returns and who has to file. If we have to look into the basic provisions of the CGST Act, there are two main sections which we need to talk about. Section number 1 is 44. Section 44 deals with annual returns and which requires every registered person, please note every registered person other than ISD, TDS, TCS, casual taxable person, non-resident taxable person. Leaving these persons, every other registered person shall furnish an annual return every financial year. Please note every year, for every financial year, electronically in such form and manner as may be prescribed. And the prescribed form we know which people talk about is GSTR 9, but I will come in detail and by when it should be filed on or before 31st day of the December of the following financial year. However, with the lot of limitations on the technology and other situations, the financial year due date is not 31st December, it is getting changed. I will come and explain over the time. Along with the annual return, section 35 subsection 5 talks about every registered person whose turnover during the financial year exceeds 2 crores, he shall get his accounts audited by a chartered accountant or a cost accountant and submit a copy of audited accounts, reconciliation statement, such other documents as may be prescribed. So if I have to simplify, what are the documents or the annual returns that needs to be furnished? It is applicable to, if you look at this section, it is applicable to everyone other than ISD, TDS, TCS, casual taxable person, non-resident taxable person. Now, if someone is a regularly registered taxable person, he would be filing an annual return called GSTR 9. And those who are registered under composition scheme, they would be filing a return called 9A. And under section 35.5, I said there is an audit requirement. If someone has to file an audit, the audit document is 9C. Please note, 9C is not a substitute. It is an additional document one needs to furnish. Then, who has an e-commerce operator, we call it as TCS, they need to file an annual statement number 9B. Now, as I said, this series we are looking at for the financial year 2018-19. So the due date for financial year 2018-19 as on date is 30th September 2020. Now, there are some relaxations that have come and owing to this threshold limits, let's quickly look at it. By virtue of notification 47/2019, the government has made it optional for those whose annual turnover is less than 2 crores to file the annual returns as optional. The annual return needs to be filed as optional. If you look at section 44, section 44 do not talk about any turnover limit, which means every registered person irrespective of the turnover shall file the annual return. However, with notification 47, there is a leeway. The filing of the annual return has been made optional. Along with filing of annual return making it optional, the audit requirement under 35(5) was only up to 2 crores. It is not required. Beyond 2 crores is what is required. So there is no requirement of reading for the audit for the people whose turnover is up to 5 crores. Now, notification also gave a further relaxation which said that more than 2 crores up until 5 crores, more than 2 crores up until 5 crores, filing of annual return is mandatory. GSTR 9 is mandatory both for financial year 17-18 and 18-19. However, both for financial year annual return is mandatory. However, when it comes to 9C, GSTR 9C, the audit was mandatory for 17-18. It has been made as again optional. It is not required by virtue of this notification. So those whose turnover is more than 5 crores, they have to file all the returns. There is no exception. Annual return and annual audit has to be filed. And this is those whose aggregate turnover, look at it, aggregate turnover more than 2 crores. And the due dates is for 17-18. February was the due dates. However, there was a state specific due dates were there. You can consider 11th February was the outer limit that was there. You can refer to notification 6 of 6/2020 central tax which have been released on 3rd February. Most importantly, for the financial year 18-19, as of now, the due date is 30th September. Alright. Now, the aggregate turnover is what I have mentioned, which is to be considered for the purpose of 2 crores and 5 crores. What is the aggregate turnover? The aggregate turnover has been defined under 2 subsection 6 of the CGST Act, which means the aggregate value of all the taxable supplies, excluding inward RCM, so all outward forward charge and reverse charge taxable supplies, exempt supplies, export of goods, and also interstate supplies of persons having same PAN, which means a schedule 1 transactions between one branch in a state to a branch in another state. All these needs to be combined on a PAN based, to be computed all India on a PAN based. All that you have to do is you have to exclude state tax, union tax, integrated tax and cess. So the gross value of outward supplies excluding cess is what one has to look at it. Now, what is very important, another notification one has to lay their hands. There were 2 very important press releases which gave clarification on what are the tables which needs to be considered. So the press release dated 4th June, that was the first of the press release which came in. Then press release which came on 3rd July. During the course of the series, we would be looking into another press releases also. The second important thing one also have to lay their hands while understanding or filing the annual returns is a notification 56/2019. It has done lot of relaxation when it comes to filing of annual returns. So one has to look into this notification. Next, there is an SOP which has been given, Circular 129, how to deal with non-filer. These are the 3 important things one has to lay their hands while filing the annual returns. Let me give you the preamble of the annual return, the premise under which the annual return has to be filed. Please pay an attention to this slide because this clarifies most of the information. Firstly, one needs to know that the annual return is an information return, which means upon filing of your annual return, once you file your annual return, your electronic credit ledger, liability ledger is not going to change. Neither the cash ledger is not going to change, because the annual return you are furnishing an information, like your GSTR 1 is an information return. Once you file your GSTR 9, it is not going to create a liability, unlike GSTR 3B, which is an actionable return. The moment you do file your 3B, your credit balance will go up and it will come down, liability gets added, gets offset, all those actions happens to your ledgers. But after you file your annual return, nothing is going to happen to your credit ledger or the cash ledger. So You cannot file an annual return by disclosing additional liabilities which you want to pay through annual return. Nor you cannot file an annual return stating that you have excess made the payment of taxes and you want to claim a refund of it. Likewise, when it comes to the input tax credit, you cannot file an annual return stating that you have extra paid the taxes, you want to claim a refund of the input tax credit, or you forgot to pay the tax, avail the input tax credit, you want to report an input tax credit now and you want to avail. Nor you have availed an ineligible credit, you would want to reverse it now. None of this can happen through your annual report. What is that you can report in your annual return? You can report what are the taxes paid. Please note what are the taxes which have been paid and relevant turnover attributable to the taxes paid. Relevant turnover attributable to the taxes paid can only be reported. Then input tax credit which has been availed, whether eligible, ineligible, whatsoever, whether the credit that has been availed and the credit that has been reversed, only that can be reported. You cannot report a value which is more than what has been availed or lower than what has been availed, or something which has not been reversed, you cannot report it now. You cannot report the turnover on which the taxes is not paid. You cannot report the input tax credit on which the ITC is not availed nor reversed. Please note this is the preamble of GSTR 9. GSTR 9 as in is an information return. You are only reporting what has been done. Couple of important points is you can also file a nil return. There is an option to file nil return. By which let me also state you also have to file, even if it is nil you have to file. Now you might be asking me, just because some time back I said turnover up to 2 crores you need not file. Yes, but however we have to compute pan India basis. Imagine you have a presence in 3 states. One state having a turnover of 5 crores and above. Other 2 states you have just registered. There is no turnover. Even though there is no turnover, it is mandatory you have to file the return. Yes, annual return is a state specific, more so it is GSTN specific. For each GSTN ID, you have to file one annual return. Very important thing, once you have filed the return, you cannot correct it or revise. There is no option of revising your annual return. Post filing, there is no change happening to your credit ledger or liability ledger. If you want to file your annual return, you got to make sure you have filed all your GSTR 1 and 3B before you file your annual return. I have been saying that you cannot report an additional liability to GSTR 9. GSTR 9 is only a statement of what has actually happened. But there is a situation where you have forgot to pay the taxes. Now you want to make good of it. The good thing about how to make good of it is you have been given a DRC 03. You can use that, remit the taxes. Having remitted the taxes, you can include that value in the annual return, because again the taxes have been paid, so what you are reporting is a tax paid turnover. That is the only leeway. Likewise, if you have an ineligible credit which you have availed, you want to reverse it, you can very well reverse it through DRC 03. Please note, the additional liability that is being discharged through DRC 03 has to be paid in cash. You may ask me why cash, why not a credit which I have a credit ledger balance as on maybe today you are filing your DRC 03. Friends, I would say 99% of the cases you would have to pay through cash. A very simple reason, what you are discharging liability now as on today, standing today in July 20 is the liability dated 18-19, maybe March 19 or April 19, whatever it is. You cannot use a credit balance which has been acquired now for a liability pertaining to then. Had this liability be available then, you would have paid it in cash. The credit which was standing at that point in time would have been used for the liability for 1920. You cannot borrow a future taxes input tax credit to discharge a liability today. So you might understand that the liability which is arising in DRC 03 necessarily has to be paid in cash. Now I have mentioned about nil GSTR 9. Let me quickly tell you about what is a nil GSTR 9. Nil GSTR 9 means everything is nil. No outward supply, no inward supply, no RCM liability, no input tax credit taken, there is no demand, you have not applied for refund, anything of sort. That is when it is a nil GSTR 9. You might have a doubt that what if I do not file the GSTR 9? What is it going to happen? Yes, you should definitely be aware the legal consequences of not filing the annual return. If you do not file the annual return, the notice under section 46 would be served. So the form of the notice under section 46 is 3A. Within 15 days, once the notice has been served, you have to respond to it. There would be a late fee when you are filing it late. What is the late fee? 100 rupees per day. 100 rupees CGST, 100 rupees SGST. And 0.25% of the turnover in the state. So it is CGST 0.25%, SGST 0.25%. So whichever is lower, that is the liability. Now, which means 0.5% of the turnover, it might also be a huge amount. So better be aware of the due dates and file the returns within the due date. And in the beginning, I have mentioned about circular 129, which has been issued on 24 December 2019, dealing with the consequences of non-filing of various returns, and one of it is also an annual return. If I have to give you a glimpse of the circular, what did the circular mention? The circular firstly said there would be a system generated message to all the registered persons 3 days before the due date as a reminder. The system generated mail or a message would be sent after the due dates who haven't filed the returns to the authorized signatory, proprietor, partner, director, karta, to all of these people a message or an email would be sent. After 5 days from the due date, the notice to the defaulters would be issued, and I said the form is GSTR 3A. Once you receive the notice, you have time for 15 days. Please note, within this 15 days, if you are not filing the return, then the officer will resort to best judgment assessments. So the non-filers are dealt by the department under best judgment assessment, and ASMT 13 would be issued. And they would also upload a summary written DRC 07 for you to file the return. Now, if the best judgment assessment is done, you might ask how will they do? They have GSTR 1, they have GSTR 3B, their purchases, your 2A data, they will put up the margin information. You might have issued the e-way bill, or they can conduct an inspection under section 71. They can do any of those things, or with the available information they would issue ASMT 13. Now, within 30 days of ASMT 13, if you are filing the return, then ASMT 13 is deemed withdrawn. It is deemed withdrawn. If you are not filing within 30 days, then the ASMT 13 will become a valid order. You have to pay the taxes. Government always gives a 3 months time before they initiate recovery proceedings. If the taxes are not made within 3 months, then the recovery proceedings under section 78 would be initiated, and the government can also make a garnishee order, make a bank attachment, all other options the commissioner have. So these are the penal consequences for not filing your GSTR 9 and annual return. Friends, with this we understood the legal background of how to file the GSTR 9, why to file the GSTR 9, and what are the nuances of the GSTR 9. please watch the upcoming series on understanding the content and the format of GSTR 9. Thank you for watching this video. Thank you.